extremely sorry about that 55. No offense to any bulls over here. But 58,546 is where the Bank Nifty is at 26,080, the Nifty. Uh, it's a big week of trade, guys, and it's a week which is expected to keep moving. And by that, I do not mean one way kind of an open line. We are already seeing evidence that yesterday was up, today looks down. That can change as news flow comes in, and I'm expecting a lot more in terms of news flow between today and tomorrow evening. Right. So we spoke about this early on Friday as well, that this was going to be a news-driven week, and two of those three events are already done. We expected settlement, which was good for all of us. The Fed outcome is done. Mostly anticipated that rate cut. The surprise has come in because the Fed chairman, has not promised the rate cut in December. So that's changed. The market needs to reflect on that, and the US markets would reflect on that later in the evening. The Trump-Z meeting is done. No, not much details have come in. The way I look at it, if it was all hunky dory, all good, they would have had a joint statement. But obviously, there's a lot more to be settled and discussed and talked about. So they would keep it for later. So that's the initial reading on that. But obviously, more statements would come in, and that would dictate the news flow going forward. So all in all, it remains a geopolitical, geostrategic driven market environment. And as derivative traders, we have to be alive to that possibility. This is not like, sweep everything under the carpet and think that everything is fit and fine with the world. This is a new world order we are in. News flow tends to dominate price action and behavior of traders, and we have to remain alive to that possibility. So stay up, especially when you come in the morning. I make it a point to look up at what is headlining across the world. And I think you should do it also because events change and that dictates the course of markets. Right. So, 30th of October, it's still the second day of the new series of November. Remember what we mentioned yesterday at the open, that the settlement was done on Tuesday. November is a new series. New series means we begin with a new bias again. All the old is gone. All the old biases included are over, and we start adopting a new bias, and we wait for the market to give us new information. Now, why do I say that? If you look at data, and I will stress on that word data over here because we are data driven traders. We focus and we make data the center of all the actions and activities we do, including the trading decisions we make. So that's a front and center, governed by data. And if you look at that data which comes in about rollovers, and you can go back 10 years, 15 years, last 5 years, you would see that the data is about 50 to 65% in favor of next month rollovers. So what does this piece of data tell you? That 50% or at max 65% of trading positions are covered or carried between one series to the next. So in this case, from October series to the November series, only about a maximum of 65% were carried. And I do not mean the index at all. I speak for the stock futures also. Your Reliances, your SBIs, your Tatas, all the stock futures. At max, you will find a number of 65% over there. Now, what does this tell you? That 65% may keep the same bias. 45% are open to a new bias. And that 40, 45, 30% is a deciding factor in the next series. The kind of positions they take, the kind of volumes they bring in, that decides price action. Remember, volume drives price. Price is not the only governing factor over here. Price is just an advertisement mechanism. It's the volume which decides where price is gonna go next. So that is this 30-35% which comes in, and they mostly come in on day 1, day 2, up to day 5 of the series. And it's quite possible that if they were long in October, they may go short in November, or they were short in October, they will choose for long in November by virtue of their free approach to take trading positions. How do we decide the bias of the new series? We decide on one factor called the rollover point, which is about 26090 right now. Now remember, this is a 30 days or a full series reference level, and it's mostly actionable in the first 5 to 7 sessions of the month. And we adopt a very, very simple rule around it. A rollover point is the zone where max volumes had come in the last half an hour to 1 hour of the settlement day session. And the simple rule to follow around the rollover point is if price stays above this max zone of volume, which is the RO point, we adopt a bullish bias. And if price stays below the RO zone, we adopt a bearish bias. So in our case, that rollover zone is about 26070 in the Nifty, and in the Bank Nifty it is at 58506. So that has to be important to you as you look at closing values and next day plans, etc. Because that rule needs to be followed around it. Pull above RO, bear below RO. Right now, let's focus into our Nifty, and I'll talk about the Bank Nifty also today. But we begin with what has happened in the morning. Yesterday was a V-shaped profile. The market went up and we created value higher. That was yesterday, right? What we see over here, whatever has happened in the previous sessions is already built in price. Positions are made around it, and that is history, right? It's gone, it's done, it's already in price, and there's nothing actionable about what has already happened in the past. What is actionable is what is happening today, and that decides what is going to happen tomorrow. So this is where we created value yesterday. And yesterday, if you recollect, we were looking for long calls because value was higher and we were traded completely above the previous value area high. So this is what Uttam also mentioned when he was doing his audio section yesterday, that we needed to be bullish yesterday. So this is done yesterday. Today, the market is opened up below the value area low. When it opens below the value area low, what is the trades you're looking for? You're looking for confirmation of the market showing intent that it wants to go down. So when you're looking at this number breaking, and we did mention about 26,200 being important because we was below the value area low, we are now looking to get puts into the market. So if you're new to the markets and new to understanding how to get your biases, etc., sorted in the market, this is a simple rule you have to take. The market is above value area high. Look to see if buyers are doing a good job, and you would see IB3s, etc., show up if buyers are doing a good job. Avoid if the market is above value area high and IBs do not show, etc., etc., and there is no extension. Buyers are not doing a good job. Even if it's above value area high, you come out of that market. If the market opens the next day below the value area low, you've got to look for puts, long puts, that is. You got to look for short calls, you have to look for short futures. Just follow these basic rules. This is basic process. We do not try to predict. We follow a simple process where we prepare, we confirm, and then we execute. We do not guess, we do not chase, we just follow what data is telling us, what our process is telling you. And if you can follow data, and if you avoid the guesswork, you avoid the chasing, you'll eliminate about 60 to 65% of the problems which happen in the market. Right? So if it's open below value area low, all you're looking for is signs of supply. And I'll just quickly walk you through why we took that trade in the morning, because around the time we took that trade, there was convincing evidence in the order flow data that there was a short to be taken. So first off, at the open, just a quick recap about this because this has got importance for tomorrow. First off, at the open, the market is gapped down and you see this 1494 caught. What is this minus 1494? This is RV candle. It is basically previous buyers are coming out and giving you at 1494 caught. So that tells you off the gap down, there is no demand added. If I had seen green caught over here, that would have told me that yes, the market has gapped down. Yesterday, buyers are still interested in pushing this market up, and we could have stayed away from taking that put. The red was telling you that the demand was out of the market over here. We watched this for about one or two more candles. 192 was the maximum we got. And right over here, we got an RS and followed this up by this stack selling which came up over here. This was our cue to get into that put. 26,200 PE it was. Perfect signal almost to get into a foot, considering of it that the market had not shown any demand. And this is the kind of trades which if you can hold, give you the kind of money. Simultaneously, if you open up a market profile chart, and really the structure as this selling was coming in around 923, 930, you would see that the market was in the stem of the P and below value area, and it had started moving down below this zone 26,140. That is why I said that it should give you a chance to move lower. So I had a November contract open, and it opened up into this value area zone, and we were expecting this test around 26020, which is this value area low, and this is what is happening. Okay. I want to quickly point out over here why we are working with November futures in the market profile and the order flow instead of the November continuous contract, because it's still day two of the new series, and we are a volume people. We are not a price people. We do not follow and we let price rule all our decision makings. We give volume a chance to work for us. And if you look at the different contracts, the November and the December, if it's a November contract, it will actually have all the volumes which have come in the November contract. That means somebody consciously took a position in the November contract. A continuous future will have a volume of the previous month added, but not specifically volume which was added in the November contract. That will build as the series goes on, but it will have a lot of data from October rolling into coming into November. But a November is a default action, a November contract is a default action in the November futures, and we track the intentional volume which came in directly in the November future. That's why this value area high, and that's why okay the order flow of the last 2 or 3 days. If you're looking at it, look at it in the November contract only, right? So this has hit the value area low of the November contract, and we paused over here. It was a good chance to take profits, and I do hope that all of you took profits. The next step over here. The next step over here, this is the 30-minute chart of over here. We took profits when this really started building up. The next step over here, considering that the market is still not adding a lot of demand, almost nothing in the C period as well. The pot is staying green on this new flow of information. We are looking to see if the market wants to initiate below this value area low of the session dated 2810. So the next plan over here is that if we get IS3s below here, below this 26,000 zone, we'll initiate further shots and we'll see if this market breaks this and goes lower. If we do get any kind of initiative selling over here, I think okay, the market is poised to go down a lot more below that zone, and there is virtually okay nothing to keep this market going down towards 25,666 or 25,700 kind of zones if we get that extension. Furthermore, just to add to what I'm saying over here, if we do get this extension down later in the day or whenever it decides to extend down, it is going to be an extension lower, a good extension lower. This will set up the market profile extension rule candidate for us. So what is an extension trade? An extension trade is a move below the IBL initial balance load, which a seller of the open has to do to convince us that he has got intent going for him. So it's not just about driving a market down by a drive or something else, open drive, open test drive, open rejection reverse. It's also about putting an extension. And when this is seen by about 3 p.m. or 3:30 p.m., then you can say that the seller did a very good job that way. That's it. So look to see if we get further follow through over here, and anything back at V back, which is this zone around 26,080,90. There was a little bit of noise as C came back to 26,110, and that noise had to do with those statements which came from that Trump ZE. But if you take that noise out and you look at the structure, You can say the seller is still around as long as price stays below the VWAP of the day. If they get ID3s above this, then there's going to be a run made on the seller, and you can expect short covering to be created. Market going back to say 26,140, even 26,200 for now. Right? For the close to it, if we stay below this value area low, which is around 26,200, I do not want to think in terms of long bullish bias over here for the day at least over here. Right? So I hope okay this part is clear. We are in the deep period right now, 10:45 or 12:15, and we'll see for what the market wants to do over here. Clarity is a tactic. Just gonna pause for a few questions. Prashant is asking the gamma exposure shown in retail charts is dealer gamma or retail gamma. Prashant, we don't have dealer gamma at NSE. Dealer gamma is a SPX specific word which is used by the US markets. See, guys, we have to be very, very careful about the way we interpret data. The US markets, they think about markets very, very differently from our markets. They have dealers, they have black pools also, and there is another network which goes in between your order and the exchange, and they can see all the data which goes between you and the exchange also. In India, fortunately for us, the kind of trading we do, we don't have those kind of dealer networks. So there is nobody who's prying on your order and your order goes directly to the exchange. So to answer that question, the gamma exposure in the India market is only between retail and professionals, and mostly 80, 89, 90% of the volume is driven by retail and professional traders in the derivatives market. FIs are a minor 10% of the market. DIIs do not trade the derivatives market at all. Yeah, seaside is not shown okay any kind of supply so far. Shalab, you're right about that. The seaside is got zeros, so they will have to show intent. Not just at the zeros. I want to see intent below 26,000 if we see some supply coming in back over here. So Amya is asking, how did you explain the first candle when that there is? So the demand and supply comes in via a reading of the COT number, and this will tell you if it's red, these numbers in any time frame. This will tell you that the market, whether it is got demand in the bar or supply in the bar. So this is just a volume number. I place a lot more importance on the appearance of zeros and the appearance of initiative sellers also. So it's not just volume, it's about intent with volume. And that's what is market mover over here. Keep it simple for you guys, especially if you're beginning off in order flow. Order flow is a very, very vast subject, and there is a lot you can take out from reading the day. But if you're new over here, look for IS and IVs. They are the easiest ones to spot, the green and the purple bars. And then look for quad confirmations. Quad is the net of demand and supply. So when it is red, you would say that the supply is greater than demand. And when it is green, you can say that in that bar, this is specific to that bar, the demand is greater than supply. You also have a 10 bar quad, which is a reading of the past 10 bars. But this is good for you to take a decision whether there is more demand in the bar or more supply in the bar. Okay, I understand a lot of you okay focusing on the color of candles, guys. These color of candles are of no importance in order flow. I'll repeat that. This color of candles are of no importance in order flow, and we covered this aspect in the trading library. I want you all of you to go through it. This is a pure price-based method of working, which was invented in the 60s. We are in 2025. The color of the candle has no importance to the kind of trading we do. So this color of the candle is what? Okay, if this is the high, this is the low, uh, this was the open, and this was the close. The close is higher than the open. Then you can say the color of the candle is green. But in the same candle, if this was the open and this was the close, if the roles had reversed, this candle would have been red in color, right? So it's not an earth-shaking event to change the color of the candle. Simply one pin means okay that there is more close at the open. They decide the color of the candle. And if close is higher than the open, the color is green. If close is lower than the open, the color is red. Don't put a lot of weight to it. It's got no meaning to us as derivative traders. You have an order flow chart, which is a V8 engine, and you have to work okay with this V8 engine, which is given to you. The third full candle is of the IV3. Keep looking at it, Soumya. It's a little bit, I know it's a little bit tricky and a little bit difficult, but this is a dynamic market. And most of you would have to give it a lot of time to get good at this. Keep watching the charts and follow the conversation which is happening over here. You would get a very good interpretation of how best to trade using the kind of order flow data which is given to you. So for now, I keep telling you a lot more nuances of the order flow, but I don't want to complicate it too much for you. For now, as beginners to order flow, you have to start with IB and IS candles, and then you can work with the other nuances like your pot and the zeros at the top of the bar, etc. Those are something which you build skill wise as you get going. But start with the basics, gradually get going upwards from there. Right. So I hope everyone is clear now. I've covered most of those questions. I hope everyone is clear now on what to expect for the rest of the day today in the Nifty futures. That is, remember, there's going to be a lot more news flow coming between today and tomorrow's close. If you're carrying positions, you have to be extremely, extremely careful. And I would also encourage you to look at the most recent data. The thing which happened at 9:15, 9:30, 10 a.m., and the market is now at 2 p.m. That's already been seized by price. It's already in price, right? You don't trade the last candle. You trade the next decision. And that next decision is going to come through because of current data, not data which happened 2 days back or 2 months back. That is already in the market. It's priced in 100% and it's priced in fully. If market changes, it will change based on what is happening in the current candle you are looking at. So focus your attentions and your energies on the current candle, and that will tell you exactly what can happen next. For me, this VWAP level is sacrosanct for today, 26090. If I see IV3s in calls or in futures above this level, we change bias and we think about short covering. We don't think about longs because we are in a below value area low, which is 26,200. If we cross 26,200, yes, okay, the market is gone long again. But for now, it could be short covering if we cross above the VWAP. And if the seller initiates below 26,000, 26,020, then okay, we go into put side trade again, initiate sellers, IS3s in futures, IB3s in puts, IS3s in calls. That will tell you that the supply is coming back and wanting to push the market lower down again. Broadly speaking, we may also stay between VWAP and this IBM. And I mentioned this yesterday, the market is doing a PB. Yesterday was a P, and we could again get a B formation, indicating the formation of balance over here. This is perfectly normal for the market to do because the market is waiting for news to come in. So this is the first P. Then we got a P, then a P-shaped profile which resembles the letter P, and we could make another P over here if we do not get that extension later of the day. All in all, this will make a Gaussian curve, a nice Gaussian curve, which after the news flow is over, could set up some excellent rates for us in the coming week. Till the start of November series, could be a lot more activity if this decides to go P, B, B, P, etc., etc. Right? So there's a lot to look forward to, guys. Keep an open mind. Keep an open mind and stay open. Learn to interpret data. It's the big picture. It's the next decision. The process is very, very simple. You get your trigger, you find your entry, you consider your stop loss, and you go for your target. Right? So I'll line off the remaining questions. We will carry it on the text chat about the way. I'll switch it back to the order flow. That's for now.